Good afternoon, everyone. Whilst we're waiting for the couple of people who are going to be a couple of minutes late, everyone to connect their relevant fireflies and other note takers, we'll get started shortly afterwards. And it's good to see a few names that I've spoken to in the past, either virtually or in person. So we'll get started in about 60 seconds once we've got everyone set up. So the structure of what we'll look to do is I'll just do a very brief intro to Antler, who we are, what we do for you, those of you that don't know. Spend the bulk of this on what are the things which we really do look for at the inception stage around the problem solution, but actually most importantly about you. And what my kind of mic drop moment in this presentation is towards the end, which is here's the stuff which, unless you are one of the 1 to 5 people in the world who are going to be successful at it, we largely recommend that you don't ideas that you don't look at, because we see about 10 to 100 of these over a given period. I'll leave time for questions at the end, where I'll answer any question as directly as you answer it. But with that, if it's good, I will get off this photo, which has been somewhat worryingly haunting me since it's been published, and actually start talking to you about who we are, what we're looking for in ideas, and then I'd love to hear from you all in the Q&A towards the end. That sounds good. I'll crack into it. So, who's Antler? We're a global investor. We back people at the earliest stage possible. You will never hear us say you're too early you're too early for us. We may say you're not right, or we don't think this is investable, but that's a different story. We're the world's most active AI investor, as well as being one of the most active globally. What that looks like in Australia is we're active across 3 locations: Sydney, Melbourne, Brisbane. We've invested in up to 150 companies, given we made some investments in the last couple of weeks. We've had more than 1,000 founders come through Antler's doors in terms of residency, and we're here along every step of the journey as the earliest backers. The benefit to you, particularly as Australian founders looking to build, is that Australia VC is a very closed ecosystem. The biggest players here are all domestic only. The value that we can bring is how to get overseas capital and overseas customers to your business as early as possible. And a lot of the way that we do that is through the 27 cities that we're in, which, depending on your type of business, I would wager that the majority of you would be interested in these locations, either as investor bases or as customer bases or as talent bases in the future. And what that means is we've created 4 billion worth of portfolio value alongside the founders. They're there, and there's close to 1 billion that's been raised into businesses that Antler's gone with globally. The people that you would see are not necessarily the most traditional VC investors. Probably we do know a way around a spreadsheet to some extent, but the stage we're at, we're investing based on the people in front of us and the opportunity, not on what your burn multiple is or other areas. That means our team's disproportionately founders. So amongst the partnership group, we've got people who've founded a $1 billion company that got bought by Alibaba, got bought by ASX listed company. I've been early stage and operator and raised a lot of money for a bunch of companies, including Airbnb, SeatGeek, and others. And our venture partners have also built businesses, exited businesses, run VC firms. So this means the people who are alongside you, not say we're always going to agree, but it means we know what it's like to be in the founder chair or what it's like to work with investors from the other side of the table. And that's a differentiator to many others that you could come across in the overall ecosystem. So what are the kinds of people that come to Antler? If you look on the right, it often is a bit more the tenured area. I think that's starting to change with some of the more developments in AI, which means the pace of development is able to drive. But still, what you see on the left is pretty true, that there's 3 kind of criteria, or 3 archetypes that we see. People who are at the forefront of technology and building. So who should I pick? Let's pick Cam from Lingo. So Lingo is a voice AI receptionist for allied health businesses. So if you've ever used the scanner at a Woolies, this actually may not be a good thing because sometimes it doesn't work so well. But the scanner at Woolies, the thing which helps you to work out whether it's a zucchini or a banana or whatever, he actually built that vision learning model. On the business and operators, let's talk about Nilofer from Seastone. So Seastone is AI powered and enabling retail fashion buyers to be able to better predict what kind of stock they need to buy and what would be the next season's trends. Like this was part of her role. She worked in omni-channel retail, e-commerce, but also had a lot of early stage growth experience at Uber. And then a domain expert, which is, you should think about this as the people who know who are in the sort of 1 to 10 people in the world that know the most about a particular business. Let's talk about Sky. I think she would describe herself as an insurance tragic, worked at Zurich and a bunch of other insurance players, and now CEO of Upcover, which is an SMB insurance platform. Any business can get their directors and insurance or liability insurance underwritten in seconds. They recently raised a large Series A round. So these are some of the flavors of the kind of things like amazing. Fortunately, everyone has their own unique story, but these are kind of some of the flavors that we see in what we kind of look for in companies that are built. Then on to what the takeaway from this one is not just that everyone uses the same designer or the same AI designer, but that for us, we're focused on finding the best founders, and that the result of that is that we can end up in any kind of business, from the classic B2B SaaS or AI all the way through to hardware. We've done in the last cohort, we've done some robotics, Web3, etc. So there's no place where we're not prepared to go. It just depends on the nature of the quality of the founders in front of us. That means we're one of the few people in Australia who'll be writing pre-revenue checks into medtech, hardware, etc., as well as the sort of the more mainstays of the Australian VC scene of AI, B2B SaaS, etc. So what does this look like in terms of our residency? So that's what we're best known for. This is where we bring 70 or so people together twice a year across Sydney, Melbourne, Brisbane. You should think about the residency on the left-hand side of the slide under the kind of the teal or light blue aspect. That's first stage is like formation and validation. So for those of you who are looking to build with other people, and certainly we believe that founding is a team sport, that opportunities you find co-founder, validate ideas alongside the Antler team and others, and really like how to upskill very quickly as a founder. Then the due diligence phase is where we work more directly. It can be one-on-one coaching with myself, one of our other partners, one of our venture partners, and the goal to get as investment ready as possible, and that then we invest the money at the end of the residency. Then that's the portfolio company, which is hopefully the next 10 years. For that first like 12 months, we're extremely high touch, given we're typically the only investor at that stage. We do a lot of heavy lifting around legals, fundraising, coaching, driving a lot of things forward towards the global expansion. I think what is unique for us is that we have a guaranteed follow-on policy where we commit that we will take 1/3 of your post-Antler round if you raise 300K from external investors within the first 12 months. The reason that we do that is that we know that teams that raise that amount have a 5x higher likelihood of getting to Series A. So we want to support the most successful teams, but also from your point of view, raising money isn't the easiest thing in the world. And if you've got your existing investor pre-committing 1/3 of the round, that goes a long way to moving things through. And we've seen both the pace to raise and the size of round increase significantly since we instituted this. So that's a very quick overview of ARC, and we've put it in the last 12 months. We had all our teams take it up, and it's been a very successful instrument for us. So that's not the end of it. We would go up to sort of pre-A to A from the local fund. We also have a global opportunity fund, which takes the winners out of all the 16 Antler funds globally. They go from A to C. That's up to sort of 10 million USD ticket size. So that means that all things being well, Antler would be a part of each individual fundraising you do up to and including Series C. And we could get to probably like 20 million of US deployed into into your business, all things being well, which I think is relatively unparalleled as a global player within Australia. So off that's the starting point, but then more about like what are we actually looking for to get you A, into the residency, and B, to get funded and going further. So there's actually this sounds like a bit of an esoteric question to start with, but it's actually quite a helpful framing of how we think about it. So actually, what is a startup, given there are ASX listed companies that call themselves startups, which probably aren't anymore. The best definition I've seen is it's an experiment to prove a non-obvious hypothesis. The reason why I like this is, firstly, it's non-obvious, because if it was obvious, there probably isn't so much money in being able to be successful in there, and it may not be necessarily a venture scale business. And then secondly, there's the notion of experiment at the earliest stage. There is a lot of both test and learn within product, within growth, within other areas, but also I know from experience, if you look at some of the investments that we've made, probably up to 50% of them, if you look at what the deck was at IC versus what it looks like 12 months later, something fundamental has changed. Maybe it's the business model, maybe it's the ideal customer, maybe it's the go-to-market, maybe it's the entire focus of the business. But experiment is a really good mindset to bring into this, and that also allows you, that gives you the foundations to be able to get to to grow fast. And ultimately, these are the two things that we think are synonymous: startups and growth. So when it comes to that, all right, so what comes into that hypothesis? The starting point is that actually the problem. And this is like a very strong quote. And the reason why I like this one is that I often ask this question of people when they're considering what areas to go with, is like, if I meet you 3 years from now and it's a random, whatever, like Thursday at 7:30 p.m., what are you, when I ask you what you're doing, do you talk to me for the next 25 minutes and like you're just so excited and energy's like spilling out of your face? If in that case, that probably means you fell in love with a problem. If it's a bit more tactical and you just like the notion of what a solution may be, 3 years from now on that random Thursday, you may be doing something else. You may be not quite so energized. So I think it's that problem is what is going to mean that hopefully for the next 5, 10 years of your life, like this problem is one that is going to be a constant and that you have a real desire to be a part of the solution for. And that means it's not just around the problem, is there's framing it. Then it means you can get into the hypothesis testing and checking where's the ferocity of the problem, who feels it, how does that come about, is that different between different categories of people, and into the more research phase, sort of before going too far into the solution. I think like deeply understanding the problem is a very important path to be able to creating like a great solution. And there's many ways to come about it. It's a simple way to split it is you've got kind of organic ways that these come about and very more deliberate ways. One isn't better than the other, but I think organic is often the most common. Many of you have probably experienced in your careers, and there's a bunch of things that either in your personal life or in your careers or in other parts of that you've experienced, it's just really clear that there is something to go after. Maybe you felt it, maybe like you've seen it in a process, or are you someone who is a PhD and you're at the cutting edge of your field that you notice a problem that many others just don't even see at this particular stage. Those are examples of the kind of organic side. And then the more deliberate is understanding like where are particular opportunities in certain areas, really breaking down particular processes from the ground up, trying to find those unmet needs, and then looking to position like what does that problem look like for an area where I have a great deal of sort of expertise in there. Again, one's not better than the other, but typically you can find yourself in one of these two frames of mind when you're going after like ideas. And what that ends up with, that often you end up that you see things which look like in one of these five categories. Again, one's not better than the other, but it's often helpful for people to understand like where are you. So the top one is seeing a problem that you've experienced for a long time, and then really just reimagining what that solution looks like. There's the application of something that's worked in one market to another. There's the application of something that's worked in one vertical or service or product or process and applying to a new industry or vertical. There's seeing an overall macro trend. I guess you could also call this the picks and shovels one, but being able to be a service of that particular trend. And then the last one, which, spoiler alert, this is actually the least common, is like the genuine white space, something that is actually entirely new, novel versus one of the four above. Again, there's a few other categories you could go into, but when push comes to shove, typically you can get into like what it typically end up in one of these five buckets for any given area. And then here's one where you are looking for quite a few of these. What does a good problem to solve look like? This isn't a scorecard game, but I would have concern if you're not solving at least two of these, and ideally you're solving like three or four of, or the problem that you've got has three or four of these characteristics. So number one, that it's genuinely either a very high price or a very painful scenario that this problem encounters. That is popular, but there's a big addressable market. There's a frequency aspect. once in a lifetime versus once in a day or a week are very different. There's a real like urgency to solving it. There is a growing market overall, and then there's the more like unavoidable, either there's a regulation or there's just a requirement to go through certain stages in order to solve a problem. I think my advice for people is always to take a pretty self-aware, cold, hard look at these. And if you feel like you're not quite getting there, then you may run the risk of being in the more sort of vitamin rather than the painkiller end of a problem, or there may not be enough direct willingness to pay from potential users to mean that you can have very quick, very strong adoption. So I mean, like, I'm not going to tell you how to do secondary research. We're all intelligent adults. I would look at the tip is like, don't just look at what's successful, look at what hasn't been successful. It doesn't mean that things won't be successful in the future, but understanding that startup graveyard is actually important. But what I'm more interested in is on the right hand side of like, actually, what can you do to gain more out of it? And my favorite example from some of the like Antler founders in previous years would be Ash from Sapien. So Sapien is an at-home fertility test for men. They started during the COVID lockdown in Melbourne when you actually couldn't get out or you couldn't go outside whether 5 mile radius. That means you couldn't go to IVF clinics to talk to target market of either consumers or the B2B buyers. He and his co-founder set up as Uber drivers, and they stationed themselves outside of the IVF clinics, picked up fares, made a bit of money on the side, but more importantly, got to spend the rest of the Uber journey actually doing primary research and talking on it. Similarly, Upcover, who I shared before, they started in gig economy insurance. They started focusing on looking at DoorDash, Uber Eats drivers, and the places where they often hang out in kind of car parks near restaurants. They started out there. You don't necessarily need to be hanging out in Ubers in order to be successful, but these are examples of ways that you can elicit more information than just going to the same research that all of us can access with a click of a button. Then, all right, what about the solution? We talked about the problem. What about the solution? They often get the question as like, for a venture capitalist, are you looking for the big grand vision, or are you more focused on what does the product look like in the first sort of 6 months or so? Unfortunately, we're hard to please. We like to both have our cake and eat it. The best way that I look to explain this is you want to think about a T shape. So you want to take us down to the very, very base of the T in what is this initial niche or the initial set of customers, the use cases that you would have for a particular product, and then being able to show us the vision of what does the bar of the T mean? What could this unlock in terms of markets that you're in, different segments, different businesses that you could launch in that area? And we are very prepared to take risk in the messy middle in between, but where someone has got a very compelling, like what happens in the next 3, 6, 12 months and can paint a picture of a very sort of big, grand vision that has the opportunity to grow and be successful. Those are the most exciting. And to sort of illuminate by a very sort of simplistic example, you could argue that back 25 years ago, Google would have said that the base of their T was how to actually organize the world's information, get better search results for early internet adopters. And then over time, then it's like, then how do you actually, then the first sort of business you build out into the T from that is actually how to monetize this via AdWords. And then obviously a bit of a cheat here because they bought more of these than they actually built in-house. You've got kind of what we know probably from 2015 onwards as like Alphabet, which is spanning many areas, but still the core cash cow is that initial like base of the T in the niche of Google, the search engine. So then the last one, and this is actually the most important, is the why you. So for those of you who end up working with us, Antler, you will hear the phrase unfair advantage extremely frequently. Our view is that for any given problem or any given idea, there's literally hundreds of teams around the world who are going after it in one way, shape, or form. Even if there aren't, if you've got something that's really good, others will will copy, and they may be better funded, they may run faster, they may do blah, blah, blah quicker than you. That means at the start, a priori, you need a strong unfair advantage. That means that almost if you're looking at all these hundreds of teams on paper or actually in real life, that you're in the top 1 or 2, and that's the starting point. So what does that mean? Like you don't necessarily will have all of these at day one, but your goal is that you will have all of these over time. It's the founding team, it's the product, how do you acquire, what's your distribution, and then what are the moats that you typically and even more so in the last 6 to 12 months, you will build over time versus having initially given the commoditization of build. And the most important bit here is actually the founding team. And I think this is where the unfair advantage is kind of, you need to give yourself a pretty high bar here. So if I were to take like myself as an example, that I've worked at places like Google and Airbnb doesn't mean I actually have an unfair advantage in advertising or travel. I would say that the experience I've like opened probably 50 different markets across different businesses in various countries. That's something which probably there's less than 100 people in the world that have had that kind of experience, which means I have an unfair advantage in understanding what it means to launch into major markets in at major companies. That's an example of like where I'm kind of trying to set the bar of what an unfair advantage looks like, not just I've worked in an industry, therefore I have an unfair advantage. So this is what I mean, like you need to be one of a handful of people. So those of you who have built businesses and exited successfully in the past, you get a little bit of a free card here because that you've done something before means you are disproportionately more likely to be successful in the future. Future talent, future investors, future customers also recognize that as well. So that is a helpful benefit to those of you who have demonstrable expertise in the founding space. Then on the product side, like saying 10x better is a relatively trite thing to say at this early stage. My best advice is like you're trying to pick a specific feature or use case that you handle at a much better fashion, whether that's via price, pace, accuracy, than where your competition is. So I think like I would narrow this down in the early build stages, like you're looking to build like that feature, and that then the product can come from that. Acquisition and distribution, and now I'd say this is almost of higher value than product in the early stages. Now, what is your distribution ability to get those first 1, 10, 15, 100, 1,000 customers, and how can that be a sustainable advantage that you can take over time? And then moats, this comes later, but I think building a competitive view as to how you will develop a moat and what that can be in the future is an important one as you move up to a more articulating the top level of the T that I talked about before. So then like how to validate in a very simple one-page piece. So the 6 characteristics of really strong problems, like try and have a flavor that you've got at least 2 of them, ideally sort of 3 or more in the demand around the problem. If you're trying to work out like just a super simple market size, top down and bottom up is often useful, but just to give you a flavor as to where this is does this get to be VC backable size? And there's different ways to calculate it, but just a very simplistic one that if you don't believe you're going to get to $100 million of revenue, then it is likely that you are not VC backable in that stage. And my call out for market share is that for the most obvious sort of like duopoly in Australia of like Woolies and Coles, their maximum market share is like 30%. So if to make the numbers work, you need to be at like a 20 plus market share, I would have a relative high degree of skepticism on it. And then the last piece is just some of these like simple VC criteria that I've kind of talked about of team background, execution, the quality of the product, etc. This is sort of the simplest way to look at things in one sense. So then here's my sort of spoiler alert, and I apologize in advance for those of you who are building in this space. For those who are building in these spaces, I draw your attention to the bottom sentence, which doesn't mean we won't invest in these businesses, but these are ones where like personally I have seen in each of these at least 20 attempts, and probably in some of them more than 100 attempts over the last couple of years. The reasons why I highlight these is that I call these commoditized ideas. This means that the number of people that experience the problem is really high. So let's pick one. Digital buyer's agent for properties. This meaning how to help you buy a home. So I mean like the problem statement is really clear. Like buying a home is the most expensive thing you'll do and is the most stressful thing you'll ever do. Unfortunately, you know that, I know that, 27 million Australians know that. That means anyone who is above a certain age who has an interest in buying property recognizes this. This means the number of people to whom the idea is obvious is very high. Therefore, that puts an even higher premium on the quality of the founder going after it in your insights to the particular business. There are structural challenges in this one of like, where do you source the properties? At what do you collaborate with estate agents or without? When you've got REA and domain, how do you fit into this? But the bigger challenge across all of these is just they are blindingly obvious, and that we have seen them multiple times. And I don't think we've invested in anything in this flavor. Maybe a form of AI powered marketing, but not as broad as that. That I guess I'll pause now. I'll happily take individual questions on these or anything more broadly, like from the group here. But just to leave you with the last piece is three takeaways. Like, is there a real problem here? Don't get too seduced by building the solution. Number two, actually, like the why you and your right to win is far more important than the solution that you're building at this early stage. And then, does it make sense? Have you done some back of envelope against some of these criteria to see whether you should move forward? So, like with that, that's me, Dan, and I am here and open for any and all questions. I'll happily take stuff in the chat or just raise the Zoom hand, and I'll take them as they come.
Hi, James. My name is Danny. Thank you so much for the wonderful presentation. My question alludes to, you've seen so many different applications for Antler. I'm sure you're seeing a lot of really early red flags emerge. Could you share with us maybe your top 2 or 3 mistakes that you see a lot of applications make early on?
I think there's there are not the skills within the founding team so this is where there's like an actual team and a business versus sort of a solo founder who's looking for a co-founder. But when a team and a business, that I think there's not the ideal skills that you would have to be successful for the given business within that team. So for example, if suppose you and I are working together and we were going to go and build a B2C app in I don't know something like food delivery in terms of that stage, if neither of us have any growth marketing knowledge or either product or growth so marketing, we are less likely than the same team with similar characteristics who also have that level of expertise and skill in there. So I think there's one of like being really quite honest with yourself around where you and if you're building with someone else, where the expertise lie. And I'd say that's one area. I think then the other one is not really being able to articulate the problem like very well, as in it's that, okay, I'm building this and it makes sense for me. And it's often like scratching your own personal itch and building something that works for you can actually be really valuable. But the danger is that you're building for an audience of one versus an audience of however big the group is. And that you may be part of either the majority or a very lucrative minority, but it also may be the case that you're not, and that we all have our own idiosyncrasies and quirks, and that what works actually for you as an individual doesn't necessarily work for the broader set of market that you have. Does that help, Danny? Good stuff. Adrian, and then we'll go to a couple on the chat.
G'day, mate. Thanks so much for that. We're not a startup per se. We're onboarding clients. I know Cam, he's another legend from Newcastle. So similar vibe. We do voice AI. We've got our own platform, been going since 2017. And so we're not in that startup where we're signing contracts and all those things. Do you invest in later stage as well? Or
I mean, so we've got the opportunity fund I mentioned called Elevate. They would invest from like Series A onwards. For us locally, like we're aiming to be the first money in or alongside the first money in. So
yeah, we've not taken any investment
from that side. That's not really our bag here.
Okay. Yeah, we've been bootstrapped. So we've not taken any money to this point. Okay, that's helpful. So in terms of pathways forward for communication, is it Antler? Is it Elevate?
Let's do this one separately. I think it's probably easier given you're in a more unique situation versus
I won't take up time. Thanks, mate.
Cool. And then whilst others are coming in, let's see what I should be answering from the chat. So it looks like some of the top ones have been covered. And then as I'm scrolling through, should applications come with a demoable POC or just the idea of the problem being targeted, the clear idea of the product to build from Farah? We are happy with either. Like, we've invested in plenty of businesses pre-product, so we are very comfortable. Like, you don't need to have a pitch deck. You don't need to show us what a demo is prior to coming into residency. We're happy to work alongside people who are building that out. If you do, then please do, but that's not a barrier from our point of view. Craig can't find the hand up icon. For anyone, like, if you go into React at the bottom and then press the React, which is the love heart, then do the raise hand. But anyway, I'll answer the question, Craig. Don't worry, I'm not. I'm not just. I also do Zoom tutorials on the side. Can you say, like, who to tell much about your idea? How do you keep it from being stolen? So overall, we would treat everything in an Antler and the residency as like commercial in confidence, but that this isn't a scenario where everyone's signing NDAs. And the reason why is that, going back to what I said before, of that the idea is the commodity. We assume that there's 100 people who are building exactly the same thing as you've got in mind somewhere in the world. Therefore, you talking about it in front of a group of 70 other people does not really pose an IP risk. If you do have demonstrable IP, then you're going down a patent route. You're doing other things to protect it otherwise. Does that help?
Yep, thanks.
Stuff like Sam asks, three usual reasons to reject a startup. So I think one is, I'll go for different ones than Danny asked earlier. I would say, like, one is it's moving too slowly. So if you have been live for 18 months and you are sort of still pre-revenue in an assumption that you're kind of AI consumer, B2B SaaS, something sort of simpler. I'm not talking about deep tech or biotech, to some extent defense, others there. Then the evidence points that you are moving too slow to be an outlier VC investment. So people not moving fast enough, in our view, would be ones that would be a reason to reject. Another reason to reject on a similar vein would be that the business model does not scale in proportion. So what I mean by that is, like, it's a consultancy model, as in you're charging by the hour, and you can only scale by the number of hours that you are able to do, rather than being able to scale near infinitely like you can when you're doing software. And then the last one is actually just that there's no clear right to play or unfair advantage from the founding team in the given space.
Can I add one, James?
Yes, please. Yeah.
Lack of validation. We all have our own assumptions, and we think our ideas are really good, but then sometimes the market is saying that the idea is not that good. But if you don't validate that deeply enough, you wouldn't know it.
Okay, thank you.
Like, Pat, do you want to go for it?
Yeah, it's just a quick one. Basically, I was wondering if it's possible to get more detailed information on exactly how you want to see prepared, presented materials, or do you always just start with the conversation?
So if you have presented materials, please submit alongside the application. If you don't, then you don't need to. We screen all the applications, we work through the stuff. So I think from our point of view, like, if we, let me be open, like, we've thought about whether we should do stuff like this, but then I think we just then end up with a whole bunch of cookie cutter stuff, and we don't allow the kind of individual creativity and opportunity to come through. So that's why we leave it more open-ended for you to bring us at what you think is most sensible.
Okay, so it's really just getting something that looks like a presentation and taking it to you in a conversation and refine it from there, isn't it?
Yeah, so when we have an application flow, so if you go to our, like, say, antler.co/Australia, you'll have all the ways to be able to submit the info. I've got Deepa asking, revenue projection of 100 million by MVP with just an MVP. That will in all likelihood be inaccurate. What would you do in a situation where you just started the startup? Like, yes, if we end up coming to work together, I guarantee that all of you will be saying that you're making $100 million by year 5. Like, that's kind of what it is. But like, the reason why it's there, and why things like total addressable market do end up being important, that there are markets where no matter how good the product, no matter how good the opportunity, the team is, it will only scale so far. So let's come up with a really stupid example that it's like the best way to submit your PhD if you are working in epidemiology in Australia. Like, there is almost no way, I don't even know how many people do that. It's probably what, like 100. There's no way you're getting 100 of those people to pay you $1 million to help them submit their PhD. No matter how great the problem, solution, founding team is, something like that, which I know is a trivial made up one, like that will not be VC backable. That's why having a back of envelope and even just an order of magnitude revenue projection is helpful. And this is less that I want it as a VC. It's more that you as a founder, for you to think of like, well, should I be going down a venture capital path, or should I look at bootstrapping, bank loan, friends and family, blah, 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 other kind of routes. So in the situation where you are at this stage, I would just treat it as the kind of academic exercise that it is, where you know it's going to be wrong, but at least you can be directionally get a view. And I always advise doing a kind of a top down and a bottom up assessment of what the market looks like. Then I've got Farah with, should the ideal product be a unique thing, or is it okay if you can see it being built in some of the markets as well? Certainly find that it's built in other markets as well. Going back to one of the sort of archetypes of problem is that, like solution is you applying something that works in one market to another. That's an entirely legitimate route. Rocket Internet made an entire like ecosystem of businesses based on that. So that is not in of itself a level of concern. What I'm more interested in is what's the problem solving? Why are markets different? And is there a big enough opportunity within the set of markets that you're going after to make this exciting and viable? Christy asks, strong investment thesis in AI. Is this in core AI or application specific industry verticals, or both? And I think if you think of it, there's probably more like sort of three areas that we look at. There's core AI, meaning like actual sort of LLMs, infrastructure underlying. There's what sits on top of that of things like, Lovable being Antler investment, being a good example of something which is very broad, but still sitting on top of core LLM infrastructure. And then there's the more like vertical specific applications of it, whether it's in healthcare or science or whatever kind of areas. We are open to all. We have seen more in the more like vertical AI, and then the kind of like applications or picks and shovels pieces of AI. I think if you are building a new like base model, then let's speak. My guess is you're probably not. But if not, I'm happy to speak on any of those, on all three of those particular areas. Syed asks, what do you typically look for in early stage social platforms before considering an investment? Because one's trying to build new user habits and emotional engagement. I think that that people are coming back even if you've only got a small number of users at this stage, it's a retention and quality game. Presumably you're not setting up monetization features at this stage. Therefore, what we are trying to judge you on is your ability to grow your user base, and B, your ability to have them happy. So that translating strong daily active users or elsewhere. Or then in this example, I don't know the exact metric, but user habits created per week per user would be a pretty interesting metric. And if you told me that was consistently growing, I would be far more interested than if it was relatively low. Brent asks, do you have preference for SaaS, or do you also back physical products? We also back hardware. We don't necessarily have a preference. Hardware has the additional challenges around what the things that we would be talking about is what would be an inflection point that happens in the first 12 months to unlock the next round of funding, because typically in a hardware aspect, you would be at like kind of a probably prototype stage after 12 months, rather than in a SaaS business, you could easily be 100K MRR after 12 months. So the way in which we assess it looks different, but we don't have a preference for software versus hardware sort of a priori. By the way, I'm happy to take live questions. If not, I'm just going to bang through these, but I also welcome speaking to people. Bo asks, does the quality of the tech matter, or is this something you aim to improve with guidance? Then the quality of the insight of what you're building matters. At an early stage, it depends on what you are building and what you're going after. I'm very happy for things, early MVP features to be built in Lovable or other kind of areas versus you needing to have everything like zero tech debt and all this stuff before you launch to customers. So this is areas that we can help, but I think it's more about like the quality of the thought behind it and the quality of how you're actually considering the product and the development of it rather than specifically how well written, whether AI or assisted, like you are building in terms of the code. Looks like Layla's offered a good answer to Tan on pre-product startups. Chris asked, are we going to be hosting any accelerators anytime soon? So our next residency, which is one of the reasons why we're all here, we kick off in just about like 3 months' time in August. And that's why we have opened up applications and we're working through those. We also, if that is too late for you for whatever reason, we are open to discussing other kind of areas, but the way in which we, for the full benefit of community and other aspects, we look to over two times a year, February and August, is when we look to conduct the residencies. Deepan, do you want to go, and then we'll go to Craig and then Odie, and then I'll go back to the chat.
Sure. Thanks, James. Thanks for the presentation and taking my question earlier as well. Just a follow-up question on that one. There are other pre-accelerator and accelerator program as well. What makes Antler so different that we would want to submit an application and join you guys?
How many of them would invest up to 20 million USD over multiple funding rounds?
That's a good question, but is there, apart from that funding, is there any additional support that you guys do differently of what StartMate would have done? Or
So I think the important thing, and I was saying somewhat tongue in cheek, I'll answer it seriously. I think but what's behind the answer that I gave is we're a VC fund, not an accelerator, and the difference there, it means that we run our residency program in order to find great investments to invest as our VC fund, rather than like a pre-accelerator who are sort of doing it because you might pay them or that they've got government funding, or a more traditional accelerator, which is kind of typically one check and done, whereas we're both incentivized and we have the ability to be a part of each stage of the journey. So that's on like the more, let's say, like the structure or what $1 from us can lead to versus what $1 from someone else can lead to. And then the other portion is actually on, I would then ask you to look at the teams involved in other options that you have in kind of pre-accelerators, and how many of them have like what number of exits they've had, what number of dollars they've been involved in exiting, and what they have actually experienced as founders or early stage operators themselves. And that's why I would feel very confident about us, meaning that that means we both have networks in investors, but also we can give advice of what it is like in that 0 to 1, 0 to 0.1, 1 to 10 kind of stage. So thanks, Deepan. Craig, over to you.
Thanks. One more question. So you talked about software and hardware, but is the hardware that you're interested in only sort of IT related hardware? What if I want to actually build a machine that's controlled by software, but there is actually a physical machine that needs to be built? Does that put it outside of your scope or not?
No. Short answer, no. Like again, it's on the merits of the overall business rather than there being a structural piece of it needing to be focused to technology industries or not. To give an example, one of the business we found about 18 months ago, which has been one of the more successful, it's actually something which allows you to, if you're running a data center or a crypto farm or like a big factory, that allows you to be able to convert your wastewater into clean water and throw off and using the heat of that to be able to power defray your electricity bill. Like this is a physical thing that has to be built and installed. So that's an example. That's just one example of things that we funded.
Okay, cool. Thanks.
Good stuff. Odie.
Yeah, can you hear me?
Yeah, if you can.
Yeah, thanks. So I know there's a lot of focus on AI, but my question is, my startup idea is around marketplace. Is that something that Antler really looks at, or if you just give me some like advice on, like marketplaces, or are you mainly specifically looking for more like AI type ideas?
Again, similar answer to the kind of hardware bit. There's nothing that we are against apart from like things that we don't think are going to be successful or like bad ideas. So like in marketplace, and also this is where like I guess like personally this is my jam. I've spent like 15 years of my career working deeply in marketplaces. My advice for you would be thinking of like what's the differentiated or exclusive supply that you can get. That's one kind of key bit of marketplace theory to be able to answer, because otherwise it's like, why isn't it elsewhere? Because my assumption in any kind of marketplace is that you can get a whole bunch of stuff either via API or some kind of bulk, but then it's the unique inventory, which even if it's only 10% of your inventory, is actually what's the most important that drives things through. The other key bit in the marketplace is it's a bit like couldn't this meeting have been an email? Often couldn't this marketplace have started off as a SaaS business and then you add on the marketplace? So I think sometimes questioning, does a marketplace deserve to be in here taking their 15 or 20% or whatever cut? And often it can lead you to the more SaaS enabled marketplace where you're giving away like a SaaS piece of software for free to often your supply, but then you're monetizing that with the demand by bringing demand together. So those are just some, without knowing the place you're going in, these are some sort of off the top of head bits of advice that I would have going in.
No, that helps. Cool. Thank you for that.
So
Pat, is your hand still up or for
any question? Just one more question following on from what Craig was saying, James. Essentially, you mentioned that particularly for hardware, you run longer timeframes. What about for both hardware and software, where you're looking for highly regulated business like health, defense, where getting the criteria for just being able to sell the product can take you quite a long time to get through that accreditation cycle? Do you support those, or they run too slow for you?
We support those, but that there needs to be something in the first 12 months that is an inflection point, because otherwise our belief is you won't be able to raise the next round of funding to get, because if it's going to be, let's say it's a 3-year process for like whatever TGA, FDA certification, it is highly unlikely that in one check you are going to, or one funding round, you are going to get all the money that you need for the first 3 years. Therefore, within that first 12 months is arbitrary, but like it's as sensible as anything else. What within that first 12 months is what you are going to go back out to get more investment on the basis of. This can be proof of concept. It can be like lab test scenarios for certain things. It can be clinical trial, so the agreement for clinical trial with some lab testing. I'm not here to define what those necessarily are because each one is different, but those would be the kind of examples for something where we know there's not going to be revenue for the first 2 to 3 years for very structural reasons, but that you can always chunk it down to ways that you can have step changes of process of development during that period.
Yeah, so it's just proving the progress is all you need. Yeah,
correct. Yeah. I go back to the chat. So Tane asks, how is a solo founder's application analyzed with regards to the team's ability to execute the solution? So I guess there's 2 pieces here. There's one of, are you a solo founder who is purely looking to stay as a solo founder? I'll answer that question, which is, we do invest in solo founders, but it is very small. I would say sub 5%, probably less than that. The reason being, it is very rare to have one person who is able to do all of the things that you need to be able to do to be successful in the particular business. And then secondly, actually like it's a lonely thing. If you're going to be doing this for like the next 5 to 10 years, that if you look at the history of startups, that founding teams, both median, mean, and like deviation are better than solo founders. Doesn't mean there aren't great solo founders businesses that are there, but the odds are more against you. Therefore, we believe that this is a team sport and would, all other things being equal, encourage you to consider co-founder. And then if you are in that bucket looking for co-founder, then well, good news. This is part of one of the features. If you think of Antler as a product, one of the features that we would have is the ability to potentially find co-founder from the people that we are working through a similar process, looking to provide like a high degree of confidence that at least you may not like them or won't necessarily want to work with them, but you could see why you could consider doing so. Andy asks, would you match non-technical founder who's lacking CTO with technical people? Certainly that's the kind of the classic co-founder pairing is someone on the commercial side and someone on the technical side. I say that I think there's probably that distinction starts to get a bit more blurred with the ability to get to at least MVP stage and some others in certain industries with AI coding tools and other areas. I think you often see now more, there's often people with very good, very strong product background paired with someone who's extremely strong on the commercial distribution side can also be a pretty strong combo. But like we certainly support those. But one thing to dispel is that our job isn't necessarily to say, hey, Andy, you need to work with these two people. We're trying to create the atmosphere for great stuff to happen. So bringing together 70 or 80 people in a residency enables the surface area for excellent conversations to happen, whether you end up working with someone or not, rather than this is a kind of like maybe an over-aggressive grandparents looking to matchmake their grandchildren towards marriage. Sam asks, can you support something unique like Hyperloop and tech mobility, but more? I'm not sure I fully understand the question, but it sounds like that. Can you support something unique? Like, yes, obviously, like going back to previous line of questioning, we are vertical agnostic. We still are only looking for the best of the best and the things which are VC backable, but there is not an idea that on the basis of it is hardware, it is Hyperloop, it is space, it is something else that we will reject on that basis. So we are open to all. For Christy asked, if you apply as solo founder and you join with another co-founder, is the expectation a 50-50 split in equity share? My response to that question is you should only choose someone as a co-founder that you feel that they are worth an equal equity share. So I think that's where you should start. There are scenarios where that isn't sensible for a bunch of very individual reasons, but you should always start with the view that I want to work with this person because I believe that that my chances of success are vastly improved and they are worth that stage. Also, I wouldn't value having worked on something for a period of time, again, because this is like ideas are more the commodity, the execution is what's highly valuable. Yavers asks, are there any criteria which could help define a defensible position moat, especially in SaaS where product features are replicated much easier? Your ability to distribute is a starting point of moat. So let's suppose there's two teams, both like identical tech. One has sold in this persona in this category for the last 5 to 10 years, and one hasn't. All other things being equal, the person with the deeper distribution is disproportionately more likely to be successful, and at least has a moat based on the network that they have and the skill that they have. The other route to an initial moat is actually going after a more contrarian view. So this may be picking out a particular feature within, I don't know, Salesforce or HubSpot that has been underloved or underutilized and trying to build out something there. So that's another route where you can build a moat by actually focusing on something which maybe not 100% of potential future buyers are currently thinking about, but actually there's a very vociferous group of people who are interested. Chris asks, do you have to stick to the idea you're applying with? Any tips on an application that could stand out? So no, you don't have to stick to the idea. In some cases, and I have had exactly this conversation in some of the interviews that we've had of, we really like your potential as a founder, but we really don't like the idea space for whatever reason. Can we make the agreement that if you come into the residency, you are prepared to drop this particular idea if we see it as invalidated? So that means that and a good example of that would be someone who actually was in one of the examples that I shared earlier of things I've seen so many times was financial well-being app. Turns out like he was pitching this, but turns out he's amazing in hardware and robotics. Turns out he's now a founder of a business in hardware and robotics, which we've invested in. So that's an example of one where the what was the idea put in is not what has been the outcome. Equally, there's people that I've spoken to in an interview, and you fast forward a few weeks later, it's the concept almost exactly as considered there, is the space that they're going after. So like I said, I think the key thing to take away from all these, like, is it this or is it that type of questions, we're most interested in you, your opinions, your views, your right to win and play in a particular area. Other things of like what type of industry and other things, like I wouldn't sweat too much at this stage. We're just looking for the most ambitious, the most insightful, and like the highest bar potential founders in Australia to bring together. We are getting close to time, so I'll put out like final call for questions. I see Sunil's just put one in. But yeah, please, last call for questions. Is there any age group you prefer for early stage first time founders? Short answer, no. Our goal is that you are able to show us why you are one of the few people in the world who should be going after this particular problem. That doesn't mean you can be 17 and that can be, and you can have that as the answer. You can be in your 40s or 50s and have that as an answer. If you look at distributions of unicorn founders over time, there are healthy chunks throughout the age ranges. So we are not discriminating or making judgments on the basis of age. Right, very last call for questions. If not, I will bid you a good Wednesday evening. For slides, recording stuff will be sent through. How to apply, I think Ronnie's put a thing in the chat. If not, just go to antler.co Australia. You can find all the stuff. And thanks very much for spending an hour with us.
Thanks, James.
Yeah, thank you.
Cheers, everyone. Bye-bye.
Thank you.
Thanks.